All right, let's get after it. Daily trading recap. Going to keep it nice and short for today. Getting after it a little bit later. Just going to do a very quick recap of what we were going after today. And just leave it at that. Not too much scanning for me going on, or just review otherwise of other equities that are moving out there, but just still get after it, keeping the chain alive. Let's go over some market internals just for me for reference. NASDAQ, $268 billion volume on the day as of 2 hours, 40 minutes after the close. NYSE, $367 billion volume. OTC is $2.05 billion volume. Traded one other little tiny position on REVB. I'll get into that one now. I actually mentioned that one first. Sub-million floater. No real obvious news catalyst that I saw here on scans. Didn't do that hard of a news catalyst push or look, but sub-million floater coming from a very hard downtrending daily as well. So could be, the thought process in this one was could be shorts bagged in this as it's already just peeled off so long. So as we're curling back to VWAP, or already started dumping for so much in this pre-market especially. But then again, too, this was during, kind of off hours of after hours and pre-market, so it's not like anybody huge would be sizing into this or just easily spooked by any price action that would start be happening during market hours here. But that was a thought process of, hey, it's a sub-million floater, you can't deny that, and we're starting to test these very key levels here, especially VWAP at that point. So let it bounce off of the top of VWAP there, started to peel off a little bit, but was still holding decently, so got in with 200 shares at just under 211. Played for the perk there, sold off half at 220. And it just started to go against me, so then sold the rest 207-ish, I think, just right around, just under my entry on that extremely small position size that I had. And I think I made 50 cents in total off that trade. Whoopee! I'm buying a McDonald's ice cream cone. I don't even think that I can buy a McDonald's ice cream cone with that trade, which is unfortunate. But I guess I'll just have to wait another day. So just speculative trade, and I think I took this trade a little bit off of the back of the morning trade that I tried to trade on the future side for S&P 500 through ES and MES. Not so much that I wanted to call it a revenge trade, but more so an invigorated trade of like, okay, I took a loss here because I was trading stupid. Well, it's not so much I was trading stupid, but the plan I had coming into today, which I followed precisely, it was a stupid plan. And I can learn from that today and maybe tried a little bit on that REVB to say, okay, hey, normally if I took a winner on this trade for ES and MES today, I would just be totally done and kind of checked out almost and say, hey, I took my winner. Let's just leave it at that. Go on to the next one, see if we can rinse and repeat. But more so of REVB saying, okay, yeah, I see what you're doing here. I need to be doing more, putting more work in. And I hate to be in that groove always of only ever putting in more work or more trades even when I'm taking losers or when I take a loss. Because that's not how I want to grow in advance. I want to be doing that same type of pattern even when I take the wins, right? I come from the world of baseball and the analogy of, anybody and everybody when they have a terrible losing game can go to the cage after the game or just put in work the next day because they just hate that feeling of losing or doing bad. But what are you going to do when you have an awesome, incredible win day? Are you going to do that same type of thing? Why is it only when you just suck so hard that you put in more work? And why is it not every single day that you're doing that same type of, carrying that same type of mentality and putting in that same amount of work or dedication to your craft? So trying to get away from that philosophy, but and especially in the world of trading, with how it can bleed into revenge trading, just different ways like that. Trying to get away from that, but not a terrible trade on REVB, but certainly not the most substantial base trade on that one. Now to this ES trade, again, coming into this one with the morning 15-minute open volatility spread trade in mind, looking for, in reality, 2 points to the upside and downside, which would have been my plan had I stuck to that algorithmic approach, which now after today too is the only way I will trade this style of trade because of the way I traded it today. Wednesdays are the least likely to produce a significant up and down move within the first 15 minutes to be repeatable. Hey, we're getting 3 points above and below the open price within the first 15 minutes repeatably. I think Wednesday, I don't think I can have the data, but pull it up. Wednesday is the least predictable of those of any days of the week. In order to do that, we're also coming up on the fourth red day here, which of course ended up being a harder red day today. Fourth red days are the most likely red day to happen of the third day, second day red day chance. And the first red day chance of of the day today being a second red day chance or a third red day chance of a fourth red day chance. fourth red day chances are the most likely. It's still under 50%, but it's funny to see that it's the most likely to happen as those red days begin to accrue more and more. So I guess that's just a sentiment of downtrending dailies, that it just, when worse gets worse, it gets worser. And especially for market downtrends, we're now testing these 420 levels. Blaze it for the overall market. So interesting volume that we're seeing as well too, that I just want to mention for myself as well, that it's not so incredibly panicky. And also funny to note that that big volume day was kind of the dip bottom for that little bounce off of that all-time high sell-off. But especially for the overall world sentiment that's going on right now, it is still going to be a guessing game with whatever happens overseas and how the market reacts in response to it. It is truly all a guessing game, but it's going to be great to be a part of it and to learn from it that way as well. And I'm still going very hard of what can I predictably and repeatably trade while in the midst of uncertainty. Just that's every day. Every day is uncertainty, but how can I take my little slice? How can I find consistency in just something so very small and minuscule right here, right now in front of me? I have the dreams and these aspirations to be trading the 8-figure accounts and things down the road with this trading career. But for right now, I think I'm aligning myself, or just telling myself in my head of, let's find something and just do it consistently every single day. Now, it doesn't have to be every single day, but let's find a trade, let's find a playbook pattern. And I've done that with the little morning dump setup, the shorting at pre-market. And I think I'm finding that a little bit more with this niche of first 15-minute volatility of that market open on the S&P 500 through futures. Finding consistency and finding a little strategy to say, hey, this is something that I found, or a little, just money kind of lying around. Let's pick these up and prove that we can find some consistency that way while I'm still so very early in this trading career. So forcing myself more into that mentality of, it's great to be doing these other scans and keeping myself kind of involved with the small cap movers or the OTC trades, how I started or got involved with the Tim Sykes mentality or inspiration. But I'm definitely focusing more on these futures trades, just more so for my own mentality's sake of, I can't be doing 30 different modalities of trading at the same time and still think that I'm learning the same way or learning as best as I can on each individual avenue of trading. I definitely want to explore more and just stretch myself as much as I can, but also be understanding that I only have one brain and my brain is not anybody else's, and I can't compare myself to anybody else and how they are trading the way they are all around the globe through the Twitter sphere. But just staying in my own lane and finding consistency, just hammering down as much as I can on one pattern or one idea and saying, is there light to this? And hey, if there's not, then there's no how young am I? Let's move on to the next one. We got plenty of time. This is what experimentation, this is what growth is all about. So getting very broad spectrum with that, but for this individual trade itself, like I mentioned, came into this one with the knowledge of, it's the most unlikely to produce a consistent X factor above the open price and below the open price in regards to futures of how many points that I can be looking for within that first 15 minutes, but still within this volatile range that we're in, while we have a negative gamma exposure in the overall market. And of course, as we're coming up in this fourth red day, still uncertain market ecosystem, and the fact that we didn't have such a hard gap or after hours move to sway anybody emotionally either way to have an immediate reaction from the open, to still allow it to just kind of Willy Wonka W within that first 15 minutes. That's what I was looking for, and in hindsight, should have stuck to that 2 points that I was looking for, both above and the open, come away with that 4-point win. Sounds incredibly small, but as a repeatable, consistent trade, I would have had that in 3 minutes had I set those limit orders in from market open how I normally would do this trade. But I came in with the mentality on this one today of, I'm going to establish the same spread trade position, getting both long and short, respectively, through one share of ES, or one contract of ES, 10 contracts of MES. And then my mentality today was, then I'm just going to kind of get a feel for how it goes out of the gate. If it starts to just immediately perk here, and then we get a little toppy in that second or third minute, okay, then I'll take off that whatever I was long, and then we'll hope that it starts to peel off from there, break to the downside of that open price, and then whatever I was short, cover as it looks, however many points I can get. Very, very stupid ideology. And I think it would have been nice, I want to look at this day here. of, okay, yeah, if it happened like on this day, which yesterday of Tuesday, establishing a position here, getting long and saying, okay, now I can see it's kind of petering here. This would have been a perfect little day to do that ideology. And I think I'm grateful that it didn't happen today, because it is a very stupid mentality of how to trade. That is exactly why I'm doing this volatility spread trade in the first place, is to get away and avoid being directional or trying to pick tops or predict bottoms in anything, which is near impossible, especially on the S&P 500. But sometimes I've luck out very nicely. But just how I was just tricking myself out with going long, and then I was thinking, oh, shoot, it's still holding up at this low here. Okay, I'm going to get long again. Oh, and sure enough, it breaks that low there. Okay, no, crap, I got to cut that long there. I think I was in and out 2 or 3 times on the long position that I had, and then I'm going short and thinking, okay, and then I'll wait for it to go short, and now it's going against me, bringing to new highs from there. I'm like, oh, crap, now I got to cut that one because it's so stupid. So I end up with that stupid loss when I shoulda, coulda, woulda, had I been actually following the system, how I designed this trade to work. Been out with a $200 win very easy within 3 minutes for that small size that I was trading, for very minimal risk of holding myself accountable to now looking at just a very small time frame window for these trades and looking to avoid those trend days as much as we possibly can. Then I come into today, or then I come on the backside like I did yesterday, and for some reason why we've been doing this in these past few days, yesterday I go long with one MES contract thinking, yeah, now I'm going to get speculative and allow myself to give myself a little bit of wiggle room, but hey, thinking I can be a little bit directional and test myself this way, because sure enough, like on days like this where I went actually short with one MES contract at this break of low a day here, covering, I think I was just under 430 that I covered that contract, or yeah, bought to close that contract. Right around here. That was a $100 win that took away some of that $500 loss that I took from the stupidity of how I traded that original volatility. But then it's on days like this where holding that, even because it was such a small size and because it was a speculative, and fully well knowing that, hey, I think there's definitely harder sentiment from the data I have as well, that fourth red days are also harder moves for how they can be percentage wise just on the S&P 500, that there could be more downside than just what I was looking for, just because I was very nice and neatly in the profit from when I got that entry within a short time frame to say, hey, I got my money quick. Should I take the money when I can, not when I have to? That's one of my rules, versus how am I actually trading that one MES kind of directional speculative contract intraday, which had I been holding that one, had it been an ES contract, that is quite the day there on just one ES contract being directional and just letting it do what it wants to do. These are certainly days that need to be capitalized on, these more trend days, fourth red days especially, from the data I have. Learning lessons all around today. And I mentioned REVB, just a little tiny trade it's whatever. But yeah, always more lessons to be learned, and excited about the growth to continue to come from this strategy. As long as it's happening and still around, I'm going to try to push it as hard as I can, especially as I'm looking back at the incredibly slow times of the 2016s and 2015s, where, yeah, there's still volatility, but it's having to be drawn out over the entire day or over 2 to 3 days of trying to predict that style of trading. Now, that throws in the whole dilemma of, okay, do I really want to be pushing initial margin on my account, of trying to put in more funds that way just so I can trade it over a longer time frame? Those are things down the road, but as of right now, we're just going to push it as hard as we can as it's still there. I'm very excited about it. And that is all I have. I sincerely thank you guys for watching. We will catch you guys on the next one.